get straight into some analysis now, and joining us for that, Ted Macharia. He's an investment analyst at AIB Capital. Thanks so much, Ted, for joining us this morning. Let's get straight into your view on the market's activity we're seeing right now. As I say, an 11th straight day of gains for the NSE 20.
Yes, as you've said earlier, it's a current earnings announcement period, so we've been seeing strong positioning, especially by foreign investors. Yesterday's activity, they recorded 82% of market activity, particularly strong trades on EABL and BAT. EABL is expected to announce their first half results at the end of this week. We've seen strong activity in the banking sector. Barclays, as you've said, announced their end-year results yesterday, and the low earnings meant a small dip in price at the end of the trading.
Of course, that a disappointment to the markets. Let's look forward. You highlighted East African breweries on your radar screen, BAT as well, and a profit on that end when it comes to British American tobacco, taking a hit from lower exports. What are your expectations, Ted, on that front? Because we've seen exports to Egypt slowing down, and many anticipating this in particular to hurt the cigarette makers' earnings in this upcoming period.
Obviously, Egypt is trying to recover from the uprising, trying to rebuild its economy, and export by BAT to Egypt has reduced. In the first half, it had already reduced, but the company was able to make a 21% jump in profit as compared to the similar period in 2011. So we expect a slowed growth in their core earnings, that is their main business, but they'll still post a higher profit than 2011. And that is fueling strong demand on the counter. That's closed at 540 yesterday.
Are you one of those fueling the demand? Are you a buyer at current price levels?
Yes, at 540 it's still moderately undervalued, and a high dividend payout ratio of that 21% jump in already half one is enough signal to keep buying.
Okay, let's move attention to Access Kenya, because that counter yesterday seeing strong demand coming through. It reclaimed the top gainer position for a third consecutive day there. Run us through what's driving the momentum on that front, Ted.
Access Kenya has been witnessing very strong demand, and we attribute it to three main reasons. The first will be a strong increase in demand for internet access, not just from corporate clients or SMEs, but also from personal home use owners. We see the first entry point into internet is obviously the mobile phone. And from then you'd want to take it to your home or to your small office. And we've seen demand for internet service increase. The second most important thing is the optimization drive, the network optimization drive done by Access Kenya. They're trying to move from wireless network to fiber optic network, which will mean in turn stronger bandwidth, better bandwidth, and as a result, because they will get rid of the base stations they're using for their wireless network, it will mean less expenses. So we'll see a growth in income on the one hand, and some slim in their expenditure as concerns licensing for base stations. So I think those factors are what investors are picking up on, and we've seen the counter gain become the top gainer for the past 3 days, and it closed at 6 shillings and 65 cents with very strong demand at the end of trading.
Ted, at one point there was a lot of criticism leveraged towards Access Kenya for its focus on the corporate clientele market and not so much on the personal, the home user base. Are we seeing a shift in that regard? You alluded to it a little earlier, but is enough of a stride being made in trying to capture that home user market?
Well, as I've said, the demand starts from the mobile phone. You have your mobile phone and you will get internet access. So Safaricom would be a very key player in that sector because of the market share they have. But after that, you'd want to get a more dedicated channel, maybe at your home or at your office. In terms of ISP, Access Kenya is the oldest in Kenya and the largest in terms of market share. So they will have to move the way the market moves. Demand has been increasing for home internet use, and so they will have to consider that in their strategy.
Of course, in
Their
the path
corporate
to
clients
getting here,
still
Ted, there
remain.
were lots of conversations being had about Access Kenya possibly sitting as an acquisition target on the radar screens of many out there. Has that conversation shifted, or are there still speculations and rumorings around it sitting to be acquired?
In terms of acquisition, I think the rumor mill has died down, because the focus now is on growth and expansion in terms of its own network. They've been reinvesting a lot into their infrastructure, so have other ISPs, and competition is increasing. So rather than focus on acquisitions, the firm is looking at growing its network, improving its infrastructure, and then snapping up that market share that is being untapped right now.
In what kind of competitive environment, Ted?
It's very competitive. When you leave alone the mobile space, because Safaricom, Airtel, Orange, they all have internet connectivity options. You will have Jamii Telcom come in, you'll have MTN data come in, you have fiber network. So the space is growing for the market, but competition is also increasing.